There's a question whether a recession is actually occurring, and I think this is kind of normal at this point in the business cycle. So, as always, right, as I alluded to, the long waves turning down, the Kuznets cycle is turning down, the business cycle is turning down. For clients, I've just updated the latest data. Now, here's something that's interesting. This is Canadian exports. The chart is in logarithmic scale, just so we can see, right? Anytime we look at a chart, we're looking at a story. What does the story tell us? So we can see with the vertical lines, peaks in the business cycle before a growth recession or a real recession. And you can see this goes all the way back to 1990 in the downturn, January 2001, 2008. You noticed that even though the U.S. turned down in January of 2008, Canada didn't turn down until the summer. And you can see that here. So exports were still booming. And less than a year, it started to recover. 2019, you can see even before COVID-19, the economy was already slowing. And then the recent one. Now, what's interesting is that it's already a year since the peak. And notice the trend lines, right? It just one trend line to 1990 to 2001 to 2019 and 2022. So we're seeing the signs, obviously. And it's working its way through the economy. So again, what that chart does is tell us a story. We can actually see it. People are saying, no, it's not occurring. Yes, it is. Again, I don't like opinions. So what I've learned through studying the long wave is that you want to look at facts. This is in my view, one of the most important charts that I'd look at in Canada. And the reason is that most of the mortgages are dependent on the Canada 5-year yield. The monetary down wave, part of the contractive cycle where you had the falling price of credit, which allowed Canadians to lever. And as you can see, we hit a record low in 2020. Surprisingly, Canadians didn't pay down debt. They've actually levered and bought more real estate. And then that fall, that secular, you can see those trend lines, that was broken. And now we're in a secular rise in interest rates, and we're going to have real estate adjust because of that, unless incomes change, right? The affordability is what drives real estate market. And we just stretched the limit from 1946 until 2022. We went from 2 times income to anywhere from 10 to 20 across Canada, which is absolutely ridiculous. We did everything possible. We went in as much debt as possible, incomes, the spousal incomes, family incomes, lowering the price of credit, gross debt service ratio, long-term amortizations. We've done everything possible to consume from the future. And now that's reversing. And until that rolls over, and you can see the latest data, the stress on the system will continue because 20% of the mortgages are resetting every single day throughout the year. Since that trend line was broken, again, we start thinking a year. So you think every single day, right? It's just like this, another cut, another impact to the Canadian economy as interest rates continue to rise and more people are having to financially reset. Okay, I want to show you this chart here, and I found it here. And there's an argument that falling interest rates is going to save the real estate market. Well, it didn't do anything for Japan. I mean, look at the 10-year bond, which just peaked over 8%, and that's at the peak of their real estate market, and they went to zero. And what happened? I mean, it just softened the blow, but their real estate market continued to fall. So there's this thesis, because you have to understand the socioeconomics of credit bubbles and when they burst. There's a shock to the system, and I went through this in the 90s. So unless you've went through a real estate bear market, surprisingly, anybody under 50 hasn't, then you don't understand bear markets, and you can't allude to being an expert. To be an expert in the financial field, you've had to deal with a bear market. And I had mentors that helped me. And interesting enough, I went through a stock market and real estate bear market just when I was starting the investment business. So it was a great lesson about capital preservation. Okay, so, but the concern is what's very different. People say, oh, this is not Japan. One more point. Yes, it's not Japan. It's worse. We leveraged from zero, but so did the US and the UK and much of Europe, Australia, and New Zealand. We did all this foolishness that we levered from zero. How do you soften the blow? Because to soften the blow, you need interest rates below where you lever to kind of make it easier. And I can speak from experiences that when I went through that asset bubble, what helped myself was the interest rates were falling, so it made the debt easier to carry with my cash flow. We don't have that. That's a big concern. As always, I appreciate the questions. I'm really loving this format. I said to my clients today that I should have done this from the beginning and started going on Twitter. I can articulate a message, keep it simple, show the data to back up, educate the client about the long wave and the secret that I discovered. Again, as I said, I wasn't planning, but it's like anybody who's outside of the business. It wasn't interested in economics. It was how the economy works, right? Not how it should work. People pay attention, how it does work, right? So it's just a reflection of history. And you take history, develop a model, and you can forecast the future. And the long wave, in my view, is the only one that is capable of doing that. And as I mentioned in another video today, the lessons of Japan, we didn't learn them. So we have a scenario that we're going to have the same outcome, right? You get the ingredients of what causes a credit bubble, then a real estate collapse, banking crisis, sovereign debt, currency crisis, right? We're just going through what's happened in the past. But as Ray Dalio says eloquently, right, something that's happened in the past, but it hasn't happened in our personal time frame. So the whole thesis behind all this is really to get through economic winter before the next greatest boom, which will come from technology and a decentralized perspective renaissance. So thanks for the input. Don't forget to like and subscribe and keep the questions coming. If there's a topic general, I'll talk about that. I've got so many videos that are in the works and ideas, but it's something general so you can understand, because everything we've been taught about how the economy works is all garbage, in my view. Doesn't make sense. It's just, oh, we should do this and we should do. How does it really work? So that's why I've gone toward this. Oh, one point really quickly. The website now is there for students of the long wave. It will have everything you need. The YouTube will be really informative. Substack will be for clients you want to subscribe to Contrato's Canadian model, right? So you can choose where you want to go with each part of the cycle and what appeals to and where you can learn from. So as I say, as always, until next time.